Welcome to today's session titled Gearing Up for Your Next Bull Run Using Small Cases. So this is going to be a very interesting session where we talk about how the market cycles have been happening so far in the Indian markets. And there is a lot of concern as to what is happening in the markets right now. We'll be taking a live look at how the markets have corrected so far. And we'll also be taking a look at the historical corrections that have occurred in the markets. And we'll take a deeper look into how long these corrections have lasted, to what degree the markets have corrected, and how we as investors can position ourselves to take advantage of these market corrections. So that is going to be the agenda of today's session. So without further ado, let us start off. In today's session, we'll take a look at what small cases are in general and how all of you can start investing in small cases using your ICICIDirect account. So let us first take a look at what small cases are in general. So if we rewind back time by about a couple of years, the general notion or the general tendency of all investors was to come down, participate in the markets by participating in a selective list of stocks, maybe one or two stocks that you've researched by yourself, one or two stocks that you've heard from a friend, a colleague, or any article that you've seen. And what we at Smallcase want to essentially do is try to offer direct equity portfolios, which are essentially called as small cases, to all of you as investors. So what is a small case? A small case can be thought of as a basket of stocks or a portfolio, which is made up of stocks, ETFs, and these stocks and ETFs are weighted intelligently to either track a theme, a strategy, or an objective. So what do I mean by this? Let us say you want to participate in the direct equity markets as an investor, and you want to do so by taking or by starting your investment through a portfolio. Now, if we were to do that, the set of options were limited as of now in the Indian capital markets. But with the advent of small cases, what we have managed to do on the platform is to offer portfolios which are built using a certain philosophy in mind. So this philosophy could be designing a basket or designing a portfolio which is investing in growth-based stocks. It could be a thematic portfolio by nature, which is tracking a certain theme that is playing out in the markets right now. It could be investing in a new idea, which is right now playing out in the markets. So small cases are essentially portfolios which are doing one or a multiple combination of these things. So now using your ICICI account, you can directly go ahead, explore all these baskets that are listed on the platform, and you can start your investment journey with small cases. So now before we proceed, let us try to understand the current market scenario. So the markets have started correcting from quite some time now, and there is a lot of concern revolving around what degree the markets can correct to. And there has also been a lot of speculation on how long this correction can last. And if the markets are overvalued, undervalued, is the market going through a cycle or a phase? So what we are going to do in this session is take a look together as to how many corrections have so far occurred in the markets since the inception of Nifty. And we'll also take a look or a deeper look into how these corrections have played out and should we be worried about these corrections. So now let us rewind time back to April of 1992. So if we take a look at the data from April 92 to May 93, what we can notice is that the markets have corrected by approximately 52% during this time horizon. So let us take a look at the next market correction that has come through from September 94 to Jan 96. So even over here, in a short span of time, we have seen the index, benchmark index, correcting by approximately 41%. So moving on towards the next correction, which happened from 2000 to 2001. So over here, we can see that the markets have corrected by approximately 53% again. And if we take a look at the most important correction that most of us as investors remember, so this is the credit crisis of 2008, which affected the global markets and the Indian markets. And here we can see the index correcting by approximately 64%. So now let us try to take a look at the next correction or the minor correction that has come through. So if we take a look at the market drawdown that happened between November to December, that is from 2010 to 11. So we can notice a minor correction for approximately 27%, and this lasted for a period of approximately 1 year. So investors as such could not benefit out of this particular phase that the market was going through. So now let us, moving forward again, from March 2015 to 2016, we have seen the index correcting by approximately 25%. And if we move forward to the latest correction that we all remember, this was when COVID was quite new to all of us. And with the advent of COVID into the, into our country, we started noticing the markets going through a severe drawdown. And within a span of a couple of months, we saw Nifty going through its sharpest correction, which was approximately by about 40% between Jan 2020 to March 2020. And most of the correction occurred in the month of March. So with all these corrections having come about in the Indian ecosystem, in the Indian markets ecosystem, how do we understand what the markets are going through right now? Is it normal? Is it abnormal? And so on. So now let us try to collate all this data together and have a one view as to how the markets have gone through different cycles. So if we take a look at the same data, what we can notice is that the markets have undergone about 7 corrections so far. And you can see all the corrections being displayed on the screen right away. So what can we infer from this data? What are the important set of statistics that we can get out of it? So in the last 31 odd years, there have been 7 significant corrections that have been recorded in the Indian markets ecosystem. And if we tend to average out, or if we tend to figure out the total number of corrections that have occurred versus the total number of years that Nifty as a benchmark index has existed, so what we can infer from this data is that the average correction, or we can expect an average correction to come through once in about 4.4 years. So this is not mandatory. This is nothing to speculate upon, but this is just raw data being understood by us. And if we take a look at the average correction that comes through, these corrections last for approximately 42%. Now, again, this does not mean that all corrections on an average have to last for about 42%. We are taking in serious corrections, market corrections, such as the COVID crisis, which came through. It could be the credit crisis that happened in 2008 and so on. So when we accumulate all this data, we understand as investors that an average correction could last for approximately about 42%. And if we take a look at the duration of how long a correction has lasted, so we can infer that an average correction lasts for about 1.2 years. So again, this is not mandatory. There have been corrections which have lasted for far less than this, and there have been corrections which has lasted for even up to 2 years. So if this is how the Indian markets have been evolving or participating, then what is it that we as investors need to understand? So the index correction that we have been seeing so far from the past couple of months is nothing extraordinary. So this is something that was to be expected, and it by no means means that the markets were overvalued, or it does not even mean that the markets are undervalued. We believe that the markets go through these cycles because it is in its nature to do so. And if we as investors want to take part in these market cycles that have been going on, how do we position ourselves? So as investors, should we wait for a market correction to happen and then start participating in the markets? Or should we be oblivious to market drawdowns and simply participate in the markets at any point of time? The markets could be going through a bull run, it could be going through a bearish phase, whatever it is. Should we participate in all these cycles simultaneously, knowing that eventually the markets is going to go up? So if that is the understanding that all of us have, then what are the set of steps that we as investors should follow? So now this is where we all have different ideas. This is where each of us will differ in opinion. So if we were to take a small segment of the population, they would always tend to say that they accumulate cash, and whenever a correction comes through, they start investing the bulk of their capital. And if we take a look at another set of population, they generally tend to say that waiting for a correction actually makes no sense because they want to stay invested through systematic investment plans, or it could be through SIPs for a very long period of time. And since they are invested for a very long period of time, they do not bother much about which cycle the market is undergoing right now. And if we were to start investing at any point of time, how do we go about doing that? And are there predefined or predetermined strategies available which we can utilize? So this is where Smallcase as a concept comes into picture. Now, what we have understood so far is that Smallcase is a basket of stocks, which is designed using a strategy, an idea, or an objective. Now, let us assume that we want to start participating in the markets in all market conditions. Can a strategy be developed to do so? The answer is yes. So we have asset allocation based strategies, which we'll be showing you, where these asset allocation strategies or these baskets are made up of different asset classes. For example, it could be equity, gold, liquid Bs, and so on, where we take advantage of the fact that equity and gold markets are negatively correlated to each other. What I mean by this is that when equity goes up, gold does not tend to perform. And when equity markets are correcting, gold tends to perform. So can we take advantage of data like this to curate a basket which will perform or which is expected to perform in all market conditions? Yes, there are small cases for that. Now, for those of you who wish to wait for market corrections to start your investment journey, are there small cases available to guide you or to aid you through those investments? The answer is yes. We have growth-based, value-based thematic portfolios available on the platform. So what we are going to do right now is we'll take a look at some of the small cases that have been enabled on the ICICI platform. We'll directly head over to the ICICI platform and we'll try to explore in a much more concrete fashion as to what can be done. So now, the first step that all of us as investors should do is to head over to smallcases.icicidirect.com on your preferred browser. So once you visit this page, you will be displayed the small cases or the set of collections that are available via which you can start your investment journey. Now, in order to discover the small cases that are available, what are the things that we should be doing? So all of us can see a discover button mentioned over here on the top. So what you can do is click on discover. And now the system will show you a set of collections that are available. For example, ideal for new investors baskets, ETF based baskets, long-term investing baskets, sector trackers, and so on. So we can either explore the collections or we can head over directly and take a look at all the small cases that are available. In order to check all the small cases, under discover, you can click on all small cases. So now a list of portfolios have been made available for you to explore and go through. So we can see small cases called all weather investing listed here, equity and gold, top 100 stocks, dividend aristocrats, and so on. All these are essentially names of baskets or portfolios via which you can start your investment journey directly. Now, what we will do is take a look at any one of these baskets and we will try to understand how to, as investors, how we can understand these baskets. For example, on the screen, I can see something called growth and income. So I'm just going to click on growth and income. So now a lot of data is projected to you as investors on the platform, which both of us can simultaneously explore. So now before we start exploring the basket, what we can also do is head over to the login button here and log into the platform to be able to see all the details. So in order to log in, you do not need to have separate credentials. You need not open a separate account and you need not follow any extra steps. What you have to do is have your ICICI credentials in handy. And once you do that, you can just head over to the login button here and click on login. And once you log in, you will be redirected to basically input your ICICI user ID, your password, and your date of birth or your PAN card to do so. So now what I'm going to do is input my username, input the password, and input the date of birth. So once we do that, you can click on I agree to the terms and conditions, and then you can click on submit. So once you do that, you will be able to successfully log into the platform using your own ICICI credentials. And now let us try to understand how to explore a small case and understand all the data that has been given to us. So the name of the particular portfolio of the small case will be given on top. And here in a single line, what the small case is all about will be mentioned to you as investors. So here we can see that growth and income is a portfolio in which we invest in efficiently managed dividend paying companies screened using Kevin Matra's criteria. And now when you scroll down in the about the small case section, you will find a detailed write-up about what that small case is all about. And if you wish to understand the set of stocks, the set of sectors that you're investing in because of this portfolio, the weightages of each of the stocks that are present, what you can do is head over to the stocks and weight section and click on it. Once you click on it, in a detailed overview, you will be able to see the number of stocks that are a part of this particular portfolio, what the rebalance frequency is. So rebalancing is essentially a system that is available on the platform where we, over a period of time, remove stocks which are not fitting into the portfolio anymore, and we replace it with stocks which are fitting into the philosophy of the portfolio. So now every small case basket has a rebalance frequency attached to it, and the rebalance frequency will be mentioned here. So rebalances could happen on a monthly basis, quarterly basis, yearly basis. It differs about each and every portfolio. And you can even see the last rebalance date, next rebalance date, and so on mentioned here. When we scroll down, we are able to see market cap distribution, which shows us how the portfolio is segregated according to its market capitalization. So what we can see on the screen here is that this portfolio invests about 66% of its stocks, or 66% of its stocks belong to the small cap sector. And the mid cap sector has about 20% weightage, and the large cap sector has about 13% weightage. And when we scroll down even further, we are able to see a pie chart here, which basically shows us the segment composition or the sector breakup. For example, when we take our mouse and scroll it to one of these or a part of the pie chart that is displayed here, we are able to see the sector and the composition of the sector. For example, fertilizers and agrochemical sector has about 6.6% weightage. Pharma has about 13%, cement 13%, iron and steel 20%, four-wheeler 6%, and so on. And now when we move over to the left side of the screen, what we can see is each of these sectors and the set of stocks that are a part of that sector, which belongs to this portfolio. For example, under power generation, we can see that this portfolio invests in CSE. If we scroll down, pharma sector, we have a position in Granules and in Calab. When we scroll down, iron and steel, we have Kirloskar, Tata Steel, and Tata Steel Long. And then when we scroll down to logistics, we have Transport Corporation of India. Industrial machinery, we have Craftsman Automation. So as investors, all of us are able to understand what this portfolio is made up of. And simultaneously, if we wish to understand how this basket has performed, now this is where the performance metrics can be displayed to all of you. So for every small case, when you scroll down, the system shows you two graphs. One is the blue line, which depicts the small cases performance. And the other one is a yellow or an orange line, which shows you the respective indexes performance. So here you can see that growth and income is being compared with the equity small cap index. The reason being that growth and income, as we had seen previously, is made up of mostly small cap stocks. So naturally, the system is comparing it with a small cap index. If this portfolio were to be made up of large cap stocks, then the system would compare it with a large cap index. So we as investors can understand in one glance if this portfolio is outperforming the index, underperforming the index, or giving a return on par with the index. Now, this is the maximum performance. And in this, what we can understand is that you can see the years mentioned here below, the year 2022, 2021 up until 2018, and anything prior to this is 2017. So what this graph is showing all of us is that if we had started our investment journey with 100 rupees at the same time in both the equity small cap index and growth and income on Jan 6, 2017, when this portfolio went live, today the capital would have appreciated to approximately 242 rupees in growth and income and 139 rupees in the small cap index. So what we can infer from this data is that from the last 6 years, growth and income has managed to deliver about 142% return against an equity small cap return, index return of 39%. So if we wish to understand the last 5 years performance, you can click on the 5-year button here. Last 3 years performance, you can click on the 3 years button here, and so on. So you can also explore the SIP performance, latest 1-year performance, 1-month performance, and so on. Now, in order to invest in any small case, you need to have the minimum ticket size or the minimum investment amount available in your ISIC account. Now, the minimum ticket size will differ for each and every small case, and that will be mentioned here. So you can see that to invest in growth and income, you need to have a minimum of 33,995 available in your account presently. And this amount can change according to the market condition. So now that we have understood how a small case is displayed on the screen, how do we know which small case to basically invest in? So this is where our biases in the market come into picture. So I may be biased in the markets. I would want to probably prefer a strategy which works across different market cycles. So if I were to do that, if I want to find out a portfolio which does that, how do I do that? So on the left side, you can see filter options available here, where you can segregate small cases based on the minimum investment amount, which will be displayed here. You can segregate small cases depending on the volatility levels or the risk levels. So you can see low volatility, medium volatility, high volatility options given here. You can select any one of them to basically understand if the small case belongs to that category. Apart from that, you can also find something called investment strategy listed here. So now let us say that as an investor, I want to, or I have a bias towards investing in asset allocation strategies, which will help me in investing in all market conditions. How do I go about doing that? And what is an asset allocation strategy? So under investment strategy, what I can do is click on asset allocation. The minute I do that, only those small cases which are falling in to the asset allocation criteria will be filtered and projected to you. Now, let us take a look at the first portfolio that has been handed out to us. This portfolio is called All Weather Investing. And next to the overview section, if we click on ETFs and weights, we'll be able to see that this particular portfolio invests in gold, invests in equity, as well as debt through liquidities. And each of them have been given their own weightages. For example, gold has 37% weightage, equity has 35, debt has 26, and so on. And what is the whole point of investing in all these 3 asset classes? Generally speaking, these asset classes tend to complement each other. And if we were to take a look at only gold and equity, they are negatively correlated to each other. And that helps us as investors. So if we take a look at the performance of this particular portfolio, we can see that even during the March 2020 COVID crisis, when the benchmark index or the large cap index went through a major correction of 38% in a very short span of time, the all-weather investing basket underwent about just a 7 to 8% correction. Now, there is a reason to it. The reason is because when the equity markets were falling, gold markets were tending to do well, which is the nature of the relationship that exists between equity and gold, as we had discussed. So because of this, the portfolio did not undergo a correction. And if we were to see when this portfolio was launched, it was on July of 2018. And if we were to take a look at the performance of the markets against all-weather investing, which is an asset allocation portfolio, what we know is that both all-weather investing and the benchmark index delivered similar returns. But all-weather investing as a basket basically protected investors during the market drawdowns that occurred. So for those of you who wish to maybe participate in baskets which have delivered market-linked returns minus the turbulence that comes with the markets, or the I would say the confusion that all of us go through as investors when market drawdowns occur, these baskets can be explored by all of us to see if it fits our investment criteria. Again, the minimum investment amount of this basket will be mentioned on the right side. The CAGR will be mentioned over here, and the ETFs, the weights, the rebalancing frequencies will all be mentioned in the ETFs and weights section. Similarly, if all of us as investors want to wait through a market drawdown, and if we want to start our investment journey after the markets have corrected, how do we go about doing that? So one thing we can do is head over to the investment strategy section on the left side and basically try to pick out growth-based strategies. It could be quantitative strategies, it could be value-based investing, and so on, where the list of portfolios via which we can start our investment journey also comes through. For example, growth and income, the small case that has been that we had explored previously is a growth-based strategy. So if we were to take a look at this particular portfolio, ever since the markets have corrected, that is from the March 2020 crisis, you can see a significant alpha being given by the portfolio, which means it has outperformed the benchmark index by quite a significant amount. So for those of us who wish to wait for market drawdowns and then start participating in the markets, we have baskets readily available, which are curated according to the according to growth-based strategies. It could be quantamental, it could be quantitative, it could be value-based investing, and so on. Similarly, for those of us who wish to start our investment journey through all market conditions, it is fairly simple. We just need to pick out baskets which have been curated according to asset allocation strategies, like the ones that we saw, and see if it fits our requirement. If yes, we can start our investment journey in these particular small cases. And the process to do so is fairly simple. You can select any small case of your choice. Make sure that the minimum investment amount is available in your trading and demat account. And once you do that, the first step that you'll have to follow is click on the Invest Now button. So when you click on the Invest Now button, the system basically gives you two options, either to start your SIP or to make your investment as a one-time exercise. If you wish to make your investment a one-time exercise, for example, you're waiting for a market correction to happen and you want to invest a lump sum amount, in such cases, you can click on the one-time option, confirm your investment amount, take a look at all the small cases, take a look at all the stocks that are coming in to your account as a part of your investment in a small case, click on Invest Now, and then click on Confirm Orders. So once you do this, it is as simple as this to execute a small case order. And now this portfolio in its entirety will be picked up in your own ICICI account. So as you can see, all the orders have been filled. So now if we head over to See Investments and click on it, we will be able to see our investment listed under your satellite investments. So we can also click on our investment, see the set of stocks or ETFs that are a part of the portfolio, track the total returns in terms of percentage, in terms of rupees, as well as invest more whenever we wish to. So at any point of time, if you want to invest more in a basket that you have already invested in, you can click on Invest More. You can input the amount of your choice, confirm, and proceed. If you wish to set up an SIP, you can head over to the More Actions tab. Over here, you can see Start SIP button. You can click on Start SIP, select the date on which you wish to start your SIP, select the frequency. So we have multiple frequency options which differ according to small cases. So for this small case, we have weekly SIP options, fortnightly, monthly, quarterly available. You can also select your SIP amount. You can click on Start SIP, continue, and then your SIP will be successfully set. And at any point of time, if you wish to edit your SIP or end your SIP, the process is fairly simple. You can come over to the Investments tab, scroll down, click on the small case in which you have set up your SIP, head over to the Edit SIP option available here, and then you can edit your SIP date, frequency, or amount, anything as per your choice, and save it. Or if you wish to end your SIP, you can click on End SIP over here, End SIP, and continue, and your SIP has stopped immediately. Similarly, exiting small case is also quite a hassle-free process. So what you have to do is simply click on Exit Small Case over here, click on Exit Small Case, and Confirm Orders. So there are no lock-in periods for a small case. You can feel free to exit at any point of time as per your requirement. And as you can see on the screen, all the orders have been filled, which means that we have managed to successfully exit out of a small case too. So this is all about small cases. This is how I would suggest all the investors who have tuned into this particular session to basically head over to the small case platform. The links will also be posted in the description, where you can basically go click on them, try to navigate on the platform, find out if there are small cases which fits your own investment philosophy. It could be anything. You might be a believer of growth-based strategies, fundamental strategies, asset allocation strategies. There are over 8+ strategies which are listed on the ICICI platform. So I would encourage all of you to explore that, get set up. If you're waiting for the bearish market conditions to get over, and if you're willing to participate in the next bull run that we are going to have, We already have ready-made baskets. You can check the performance of each of these baskets, take it into account, and then set up your position and start your investment journey. Or if you wish to start right away, we already have asset allocation strategies in place. And I would encourage all of you to go ahead and explore that. So this is all about small case investing. And I hope that you will be tuning in for the next set of webinars that we're going to have. Have a great day. Thank you.
Investments in securities market are subject to market risks. Read all related documents carefully before investing.
Subscribe to our YouTube channel and click on the bell icon to never miss an update from ICICI Direct.